Yo, 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 Froggystyles here, Mediocre Trader. We're about to bring you some news on Archegos, on the CEO and a CFO that was arrested. Tony did a really good video on this, Tony Denaro. We're going to recover it and add some stuff to it because there's a lot more that I wanted to add into it that may need to be included. So first thing we're going to do is we're going to fire up his clip. Link in the description for Tony.
Welcome everybody.
And let's go and pull this video clip up here and get right into it.
Good morning, guys. Tony Denaro here. Big news of the day.
Actually, let me get my headset on before we start having echoing. So let me get that going here. All right, let's get it.
Former CEO and CFO of a $35 billion hedge fund arrested on securities fraud. Let's get right into the details. On Wednesday, April 26, arrested at their homes by federal agents, CEO Bill Huang and CFO Patrick Halligan of the former Archegos $35 billion hedge fund were arrested and indicted with federal charges. Let's get right into the details here from the Wall Street Journal. Archegos Capital Management founder Bill Huang and CFO Patrick Halligan have been indicted on charges of securities fraud, wire fraud, and racketeering, federal prosecutors in Manhattan said on Wednesday. Prosecutors allege that the men took part in interrelated schemes to unlawfully manipulate the prices of publicly traded securities in Archegos' portfolio and to defraud leading global investment banks, remember Credit Suisse. They allege that Mr. Huang's fraud pumped Archegos' portfolio from $1.5 billion to $35 billion in just 1 year.
Now you're going to want to remember that number that he posted right there, or that he has right there in that article, 1.5 billion to 35 billion in 1 year, because I'm pretty sure that Archegos isn't the only one doing that same stuff. And I do got more information to follow that up with when we're talking about Citadel Securities and Advisors. So,
yeah.
And keep in mind, they unlawfully manipulated the prices of publicly traded securities a year ago. So they were allowed to kick things around up to this point before getting arrested, which is like insane why it took so long.
Just 1 year. If you don't recall, the hedge fund Archegos famously collapsed in March of 2021. Here we are in late April 2022, a little bit more than a year later, and finally these men are being brought to justice. Continuing on with some highlights from the article, it says banks scrambled to liquidate positions tied to Archegos, rapidly shaving tens of billions of market value off large companies, and when the dust had settled, more than $10 billion in counterparty losses had been handed out from this fiasco, including Credit Suisse, Morgan Stanley, and Nomura Holding.
Now, what's interesting about that, I don't see Goldman Sachs on that list. Interesting. Wonder why they left that one out.
Holding. These gentlemen had a complex scheme of investments designed to hide their true investments from banks, and at times they had built up positions as high as 25% in certain companies, and they were circumventing the rules that require them to file when they have more than 10% ownership in a company.
Yeah, isn't it kind of interesting how they're kind of skating around the rules and not getting in trouble for it? I mean,
yeah.
Wonder how many other people are doing the same thing.
Exactly.
At Archegos, it says here, Mr. Huang built up concentrated positions in companies and held some positions in a mix of cash and swaps. Ever heard of swaps? With money borrowed from banks across Wall Street. The swaps Mr. Huang favored, which included total return swaps and bullet swaps, gave Archegos the profits and losses on the stocks underlying the swap contracts, while its lenders held the securities. This is all sounding really familiar, guys, right? And this is just the tip of the iceberg of what is going to unravel in the months and years ahead, as all of the positions and the nefarious activity that these hedge funds are doing is going to come to light.
He's exactly right. This is just the beginning.
As always, I'll be sure and keep you updated as the prosecution on this case unfolds, and certainly let you know the second we hear about the next hedge fund manager, CEO, or executive officer that gets arrested or indicted. I am Tony Denaro. Thanks for catching up on the news with me this morning. I hope to see you on our live stream at market open and market close any day of the week. Don't forget to buy and hold that subscribe button on your way out the door, and I will see you on the next video.
All right,
Thank you, Tony.
Very well done video by Tony, as always. And now we get to add into it. There's a lot more stuff than just that. So, let me make sure I got my volume set right here. So let me pull up this first article that I have here.
There we go.
This is the first article I have here. Archegos owner Bill Juan, former CFO, charged with securities fraud. I mean, there's a date, April 27th. And basically the same information that's showing up over here, but there's a lot more stuff to it here. Obviously, let me see here. Using the New York-based family firm as an instrument of market manipulation, which is definitely one of the issues there. They were using this firm, but there's more about what it's called. Like, a lot of people are looking at it as Archegos, and they know that it used to be known as being, what was it, Tiger Asia Management?
Yeah, Tiger Asia.
So what they did was they took it from Tiger Asia Management and turned it into a family office back in 2013, which if you remember, AMC Bigham's was talking about family offices and how this is how they're skating around things. So I think that's very important. We do need to start looking into family offices. Let me write that down on my list here of to-dos. We'll get that one on the list too, because that's kind of important. If this is what they're all doing, we need to see what is going on here. The case marks one of the highest profile criminal white-collar prosecutions in years. The portfolio from 1.5 billion to 35 billion in a single year is what they grew from. So, I mean, all that information is already posted out there. Both pled, Juan and Halligan were arraigned Wednesday afternoon, and both pled not guilty. Like they did nothing wrong, to charges of racketeering, conspiracy, securities fraud, and wire fraud. Juan was released at a $100 million bail, which, I mean, you can commit billions of dollars worth of damage and get a slap on the wrist for $100 million. That is insanely low. Prosecutors also said that the two former Archegos employees, William Tamita and Scott Becker, have already pled guilty for their roles in the alleged conspiracy. So there was already two former Archegos employees that have already admitted guilt. So these two other guys here, Juan and Halligan, want to plead not guilty, and they're probably like the head of things. Archegos growth depended on a complex financial instrument known as total return swaps, which Tony covered. But some of these wagers went wrong, prompting Archegos lenders to ask to be repaid. When the firm couldn't, some of the banks sold their positions, causing stock prices to fall even further. Archegos itself collapsed. These defendants and their co-conspirators lied to the banks to obtain billions of dollars, and then they inflated the stock price of a number of publicly traded companies. These lies fed the inflation, and the inflation led to more lies. Then the bubble burst, prices dropping, he said, and then when they did, billions of dollars of capital evaporated overnight. So they just pretty much just imploded. Credit Suisse, Morgan Stanley, Nomura Holdings incurred a collective loss exceeding $10 billion after Archegos collapse. For some reason, they leave out Goldman Sachs. That's two articles in a row that don't talk about Goldman Sachs. So I'm not sure why, but they did take a hit. Juan led market practices to believe that the prices of these stocks were products of natural forces, a supply and demand, which is obviously not true. when in truth they were artificially products of Juan's manipulative trading and deceptive conduct that caused others to trade. Archegos is one of the largest hedge funds to collapse since 2008 financial crisis, sparking the calls for tighter oversight of Wall Street from lawmakers, which they should have did back in 2008, or we wouldn't be having this problem that we have today. It spurred scrutiny of what critics describe a lack of transparency. Obviously, transparency is a problem because they're self-reporting, tied to some of the trading contracts and to family offices, where, if you remember, AMC Begums has been screaming about this for a while. And I think we probably need to look into that more, the private investment vehicle of wealthy individuals. This case reaffirms when executives commit crimes, those crimes in that conduct affect companies and ordinary citizens alike. Monaco said, adding that this kind of crime jeopardizes pensions, savings, and jobs. So just remember, your pensions are not safe, savings aren't safe, and maybe your jobs aren't safe if these companies pull shenanigans like that. So sounds like a national security risk, if you ask me. Glad they're finally looking into it. Down here it says the SEC also announced charges on Wednesday alleging Juan and Halligan, two former Archegos traders, ran a scheme that hinged on a consistent cycle of manipulative trading, lying to banks to obtain additional capacity, and then using that capacity to engage in still more manipulative trading. At its peak, Archegos had an exposure of $160 billion, which is insane because they only had a fraction of that in cash. Fraction, which it says way up here, 35 billion, but they had an exposure of 160 billion. If I can find the spot.
Yeah, it's crazy how they get away with doing all that.
I think I lost the spot. There it is. The SEC alleged putting it on par with some of the world's biggest hedge funds. The house of cards can only be sustained if the cycle of deceptive trading and lies and buying power continues uninterrupted. So if you think they're the only ones doing it, I'm pretty sure you're wrong. Once Archegos' buying power was exhausted, the stock price fell. The entire structure collapsed, allegedly leaving Archegos counterparties billions in trading losses. So, as expected,
holding the bag.
Juan, a veteran, has come under SEC scrutiny before. In 2012, they accused him and his former fund, Tiger Asia, with insider trading and market manipulation. Juan and Tiger Asia later agreed to pay only $44 million to settle the SEC charges. Sounds like paid him off. After the investigation, Juan turned Tiger Asia into a family fund or family office called Archegos. So, yeah, again, family offices sound to be part of the problem here. And let's see what else we got here. One last article to pull up here, as soon as I figure out where it's at.
That's the one.
Right here on Wikipedia, it says here, Archegos Capital Management, which is, you can see all the information over here on the side, defaulted on margin calls, which I'm not sure how you default on margin calls. Usually they take your stuff and that's it. Several global investment banks, including Credit Suisse, Nomura Holdings, as well as Goldman Sachs and Morgan Stanley. Let me see. There's the family offices created back in 2013. So we know that that's what they're doing. They're using family offices to basically get around SEC regulation. Also, in 2014, Juan was banned from trading in Hong Kong for 4 years. Sounds like Citadel, if you remember back when they got banned for 5 years for short practices over there that caused possible crash of the metals market.
Talking about in China?
Yep, over in China. So it's not like they're only pulling a trick over here. They're getting caught over there and not over here. So it's kind of weird. China or Hong Kong are doing more to protect their investors than our own SEC. I think that's everything here. I do got 2 screenshots to show you here in a second. Let me pull them up.
Yeah, it's interesting that they get away with that, and all that money that they're able to get leverage on. You know, that little bit of money they get leverage on, all that money by cheating the system. It's crazy that they get away with it.
Here's Citadel LLC. As you can see, they started off, and I'm not sure if these dates are exactly accurate, but it says here, you know, like July 17th, they have like next to no money. They popped up here to $60 billion. And then they shot right up within, I mean, if this is right, this is crazy. July 17th to July 21st, very short period of time. It shows 60 billion all the way up here to 200 and a little over $30 billion in a very short period of time. I smell foul.
Yeah, it's
And then we got one more to show you here.
I don't know how they get away with that. Like, if we did that, you know, if you made that much money, the federal government would be like, "Where'd all that money come from?"
Here you got July 13th back here. Citadel Advisors LLC has a little over $50 billion. By July 21st, it shows here a little over $475 billion. So I'm sure you don't earn that kind of a return easily. So looks like fraud to me. I don't know, but call it what it is. But you see the facts. But I think that's it. Is there anything you want to add to that?
Yeah, don't try this at home, kids, because it won't end the same way for us. You'll be a lot quicker. Nah, it's crazy that they get away with it. That's really ultimately what drives me nuts is that how long has it been since that happened, right? How are we now just arresting these people? That's only one of them, right?
Yeah.
Look at what's been going on. It just, I don't know. That's why the rules are rules for thee and not for me, you know?
Now, if you want any of these links down in the description down below, I do have them provided. The Tony Denaro link, the Washington Post link, and the Wikipedia post are all down there. So, yeah, pretty much looks like they're too big to jail, too big to fail. So, and I guess if you sprinkle enough money into that coffee cup, you get overlooked.
Here you go. You need coffee, Mr. Ginsler?
Yeah, my Ginsler. So, yeah, I figured I'd break that out. We were just digging into that. I think that's important. That's just the tip of the iceberg. I think there's more dominoes to fall. So we'll see if more dominoes fall or if they don't, because we need them all to fall because they're all over leveraged. So let me check the chat here, see if we got any other questions.
Doc Zeno says squeeze specialist certifications are given. Okay. Thank you, Dr. Zeno. Did you get your certificate, Froggy?
No, I didn't get my certificate. I didn't know if you get those out of Cracker Jack boxes or what. Like, is that how you become a specialist? But I guess to be a squeeze specialist, you can't read a chart. So I'm going to have to like dumb myself down a little bit. But other than that, we'll be back with the next video here. Hopefully you guys like this Archegos news. And I want to thank Tony Denaro for his well put together video. And I'm sure there's more to come. So thank you guys for coming. We'll see you in the next video. And
good night.
Peace.